Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Hey, Jim.
Tim,
nice to be here.
Did we have enough of a clear out in the markets after the December drop to ensure that the deadwood was cleared out and now it's clear sailing again for the equity markets?
No. I don't think so. That it's it's just part of the setup. We have this massive top that is forming, and it's just part of the process. We obviously had a cycle down there, and it was of several degrees, but no, it's part of the setup. We have certainly not seen the unraveling that is coming. The process with the top is obviously not complete, but the process is still underway. I mean, like I said, we watched all of last year. This is such a long, drawn-out process. It took all of last year just to get the setup in place with a Dow 3 primary bearish trend change and the cyclical structure in place just to get the decline, the little correction that we saw into December. And now we're seeing this bounce out of that as this overall setup continues. And, here we are now 3 months into this year. And, it's, like I said, I hate to use the word again, but the process is still underway.
With that, warning or idea in place, what should people be doing with their equity investments right now?
Well, I mean, the equities, the risk is definitely on. At the moment, is it? Well, no. I mean, we have short-term, intermediate-term, cycle still in place. I think we're nearing some sort of a short and intermediate-term cycle top. But like I said, the higher degree is still in the process of setting up. So, is there some short-term risk coming to the market, intermediate-term risk? Yes, we have some short and intermediate-term cycles coming due, which means we should correct, and then, we'll see the next piece of their overall setup evolve with regard to the higher degree top.
Could this be a classic sell in May, go away year?
It may very well be. That may very well be. Looking at it depends. Let me try to explain this. We've talked about this before, but with technical analysis, you have a window of opportunity. It's like I said, it's like driving down the road and you go to an intersection. You have the opportunity to turn. When you get to these cyclical junctures, which we're coming up on with some short and intermediate term cycle tops, the opportunity is there for the turn, and when the opportunity is there, the opportunity is there for it to further evolve. It's like, how does the market respond to it? It's a risk window, if you will, and we are entering that risk window with these cycle tops, and how the market responds to that setup, or to that risk window, I should say, is, who knows? I mean, flip a coin on that. But we are moving into that time frame, and then we just have to see how the market responds to the cycle top.
What's that big jump in the market caused by a record amount of stock buybacks?
Of course. I mean, there's been every trick in the book. News manipulation. Just the other day, someone told me, I didn't hear it myself, but someone told me that, they were using the China deal again as I think probably fake news to To try, well, actually, the guy that was telling me this was telling me that it was fake news, that it was debunked, that it was just a, just noise. But, anything and every trick in the book to goose the market to try to hold it. We've been seeing this for actually a couple of years, but it's been blatant the last year or so. Every time the market gets to one of these technical junctures, that's what I'm saying. How does it respond? The Fed maybe will come out and make a dovish speech or comment or whatever, and that's manipulation. That's or maybe there's a tweet that goes out or whatever the news may be to imply. And it's interesting how that's all occurring at these timely technical junctures. Like I said, when there's the window of opportunity or the risk opportunity is there, and a lot of times they try to front run that with the news. Right,
and now we have. Well, President Trump is meeting with the Chinese vice premier today about trade. Is that the kind of thing that people are trading on?
It's the kind of thing that it seemingly is affecting the market. It ultimately is not going to matter. They're squeezing the turnip dry. And then once the setup is finally complete and in place, none of this stuff is going to matter. But it's going to matter until it matters, and it's not going to matter at all. And like I said, it's all a very long, drawn-out topping process with the most overbought, extended bubble in U.S. stock market history. That's what we're dealing with. And so it's no surprise that the top is accordingly as long and drawn out as the bubble was stretched. So, I don't think anything's changed other than we've seen this very nice counter trend bounce, and here we are now. I think moving into an intermediate term cycle top.
So right now it's okay, but you should be ready to jump like a cat on a hot plate.
It's kind of like my old buddy Kennedy Gamage, an old time technical analyst said. He said this is one of the times to dance close to the door, and the danger is that. Knowing that we're dealing with a much longer-term top and the risk associated with that, or let me say this another way, the ultimate risk associated with that top is that as you enter, it's kind of like walking, let's do another corny analogy, it's kind of like walking through a minefield. You don't know when you're going to step on the mine, which one of these technical windows of opportunity at one of these cycle turns is really going to bite. So far, what we've seen is it'll try to bite, it'll kind of morph, and the market will decline, and then you get these rallies, and it kind of seemingly saves itself. But what is happening is that the entire topping process is just extending. It's still taking place, but it's kind of camouflage. Nobody's kind of smelling what's going on. It's just and the market seemingly always comes back. But one of these times, we're gonna move into one of these windows of opportunity where it looks like that everybody's complacent, and then all of a sudden it's gonna really bite. And that's what I say. That's the danger is that when you move into these cyclical windows, you don't know which one of those times it's really going to bite, and which time it's just going to be another one of the same things that we've seen all along as it's drug on. So that's the risk.
We've all seen the movie It's Quiet. Yeah. Too quiet. Yeah. We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's happening with gold? It seems to be stuck around $1,300.
Well, that 9-year cycle top. There's virtually no doubt in my mind. I mean, all of the structural evidence suggests that the 9-year cycle top is in, just as we said. There's been no change. The advance out of the August low was, a counter trend advance, and now, we have that intermediate longer term degree cycle top in place within the context of the 9-year cycle, I should say. And, any bounce here should be counter trend. Gold goes lower. Nothing's changed there. I think that, ultimately, not saying that gold has to collapse because of the 9-year cycle top, but the general trend is down. It should be, come under pressure into the next, higher degree 9-year cycle low. And we have also toward the end of this year, there's an annual degree cycle, which I think is peaked. So I think, in the foreseeable future, gold should be under pressure.
And that means buying opportunities, right?
Well, ultimately, but with the 9-year cycle top in place, the overall bias is to the downside. And then, once we get into this next 9-year cycle low, then I think this next 9-year cycle may be a pretty exciting, a low for gold and metals in general. We were hoping that we would see the right setup with this recent 9-year cycle low, and that would be the one that everybody was looking for, but it wasn't. It wasn't. So, unfortunately, the gold bugs have to sit through another setup with another 9-year cycle before that opportunity is back on the table for a meaningful, the really meaningful advance that everybody's looking for in gold.
What's happening with crude oil?
Pretty much the same as with equities. Intermediate term low, it should be a counter trend bounce, and lower prices ultimately. There's some longer term cycles that may have also bottomed in December. The intermediate term advance is going to stay intact until we get intermediate term sell signals, and so far we haven't. Right now the advance is, like I said, intact, and, higher prices until we get that intermediate term cycle top. The expectation kind of is that, equities and oil have been in a similar cyclical rhythm of late. And I'm thinking that we see both oil and equities peak in close proximity. And then, once they do, once we get the intermediate term sell signals to turn it, then I look for both to happen at approximately the same time. And then, we'll see. From that point, like I said, you're in the window of opportunity for, some risk to the downside. But overall, I think this has been counter trend with, not just crude oil, but commodities in general.
Where are we in the interest rate cycle?
Well, kind of interesting. I was just reading some stuff. Actually, a fellow analyst, old time guy, sent me some stuff the other day about interest rates and what people are thinking. And it seems that the common thought on the street is that lower interest rates is good for equities here. And I'm not so sure that that's the case. I'm looking at some data that I'm going to be covering in the letter coming up in April that shows that may not be exactly as it appears. And there's some pretty hard evidence to that effect. Overall, what do I think about rates? I think rates go lower. I think the short-term rates are gonna definitely move lower. They have been moving lower. The 90-day T-bill hasn't cracked yet, but like the 3, the 5-year rates have been moving lower, and I think the extreme short-term rates go lower.
We'll have more with Tim. Cycles Man Wood will have the answer to a listener question.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Wood. Tim, you mentioned the 9-year cycle low for gold in 2015. This is the listener question, by the way. Tim, you mentioned the 9-year cycle low for gold in 2015 with the follow-up top in 2016. Is the top in 2016 a 9-year cycle top? If so, I'm a bit confused. How does that occur in just 1 year?
It's called left translation. You know, cycles are measured from low to low. And, you know, think of an isosceles triangle where, okay, say a cycle on the left corner of the triangle, bottom left corner of the triangle is, you know, that's the bottom of the cycle. And in the far right side of the triangle, that's the 9-year mark. So from low to low, it's 9 years. Well, where does it peak? Does it peak? If it peaks right in the middle, that would be 4.5 years. If it peaks to the right of the center point, you know, say 6 years, 5 years, whatever, that would be right translation. If it peaks to the left of the center, that's left translation. Right translations are bullish. In other words, it's like going up the steps. You start stepping higher and higher and higher, and that's what skews and pulls the top of the cycle to the right and creates the right translation. And a bearish trait is you have a left translation. It peaks to the left of the center, and then from that peak, the cycle stair steps down. And so that is the very trait that makes this 9-year cycle top, and it makes the outlook bearish. It's simple translation.
Tim, thank you so much for chatting with us. And before we go, because you have some information that you think our listeners need from your newsletter, how can people get it?
It's cyclesman.com. And like I said, I'm doing some studies that'll be out in the April letter, looking at interest rates, the impact that I think that it's going to have on the market, some pretty interesting information actually, as well as where we are in the cycle with equities, what it means, the overall setup. Really some pretty good information, I think.
Tim, thanks again.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.